This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro, and today I want to give you an update on the stock market, give you some levels to watch. I'm going to use a different chart this time, at least give you a glimpse of a different chart this time that gives you some pretty good idea of where support should be coming in. So let's go ahead and get into that right now. I want to start with the volatility, as I said, and I'm just going to mention that the investors intelligence sentiment number has dropped to 5%. So we're now, the bulls are at a 2-year low, and now we're only 5% more bulls than bears right now. So when we start to see that dropping, and we're not seeing the market drop that much more than where it was. So the fact that that's starting to drop in terms of the number of bulls versus the bears leads me to believe that there's a pretty good chance we're going to go negative. That we're going to end up having more bears than bulls. Just historically speaking, once we get this close, there's a pretty good chance we're going to work our way below zero. So, I think we want to stay tuned for that. The other thing is that, we can see that this 18 MA, and I'm going to show you in a second, is actually starting to tilt over. And this week, if price stays about where it is or lower, is going to turn down for the first time since this move started back in 2020. In terms of the volatility, we have this ATR on a weekly chart still moving up pretty strong, above its moving average. And in times past, when that's been the case, there's been some risk in the market. So we just want to keep this in mind. Until we see a significant drop in the volatility, that means the number, basically looking at the S&P and looking at how much it trades per week in a range. The size of the range right now is 136 points on average, going back the last 20 weeks. If you look at it back in September of last year, it was around 94 points. So it's a pretty significant jump in a short period of time, how much the market is trading. And you can see it by the size of the bars growing. I wanted to show this chart. Haven't shown it in a little while. I've got the different MAs listed up here on the left. And these are the actual MAs overlaid onto a daily chart. So I've got a daily 18 MA in the magenta, as it always the color I always have it. And then I've got a 18 week line in blue. And if we zero in on this, you can see that for the first time, this line is starting to tilt down. Obviously, it does depend on how we finish the week, but pretty good chance that this line is turning down for the first time, again, since this whole move started way back in earlier in 2020. So I think that's pretty important. We get that line turned down and we get the 18-day crossing down through the weekly line. Then we start to look at the next target level, which is the 18-month line that's listed here. And then if we get into something really ugly like we did in 2020, then we go down to the quarterly line, the 3-month 18 MA, or even the yearly. I don't have that listed up here, but that's what we dropped down to back in 2020. So we just want to have these lines because these 18 are really good levels of support in each time frame. So if we break the 18 day, then we look for the 18 week, and we can see what happened. The multiple times we broke the 18 day, we came down and found support at the 18 week, and now we're finally breaking that 18 week and rolling it over. So we have to sort of assume that the target level is the 18-month line. How it reacts there, and I would tell you that as I go and look at the multiple time frame analysis and looking at momentum, because when I look at the monthly chart and look at this 18, when I see the momentum characteristics look pretty good, like we had a new high in MACD and we had a new high about 33 or 34 in the ADX prior to the pullback. This is not divergence or anything. So I'm believing that this is I'm kind of presuming that this 18 MA is going to hold. So I think we have a target at the MA line, but I'm not going to buy the moment it touches that line. Okay, this is pretty important, and I want to make sure I covered this today because if excuse me, if I'm short this as a trade, then I take this profits at this 18-month line. That is the target for the move to the downside. However, I don't look to get long at that point. What I would do is go down to the small time frame, and I might even go down to a 10-minute chart and look for a sign of a reversal in the trend on a small time frame at this 18 MA. If it never occurs, then we might just break right through the 18 on the monthly. So I want to make sure you understand that. That's how you want to trade an individual stock as well. When you come down to a specific target zone based on the higher time frame, you don't just buy the moment it hits that level. If you want to be aggressive, you go down to the really small time frame. But based on the momentum characteristics, and if we look at the weekly chart, look at this red DI and look at how strong it is relative to where it's been for the last year or two. I think it's telling us we don't need to be in a huge hurry to be a buyer on a pullback. Now we know the target area is down around 411, but what I told you last week is I was looking at the retracement levels, but I was also saying that if the red DI made a higher high while price came down and took out this prior low, then we sort of have to assume that this is a signal for red to start moving up again and green to start moving down. So we're probably moving back into an expansion phase to the downside based on this signal. I say probably because there are no absolutes. We can only deal with probabilities, and the probabilities are pretty high that this wants to keep moving lower for now. If we see a divergence, so let's say price moves down and makes a lower low here below this low, and red DI does not confirm, then we can maybe be under the impression that we could look for a little bit better rally. But it doesn't look like it's going to do that. And MACD is crossing back down through its signal line after a small move above. But I'm keying off these DI lines right now, and I think they're telling us what's taking place. So if you want to look at the smaller time frames, you can do that. But right now, I think the daily is giving us a pretty strong signal based on the DI lines, compounded by the red DI on the weekly chart. So we always have to stay on our toes in this type of market environment. There's a significant amount of volatility. If you're trading, you want to make sure you take partial profits on any kind of moves in your favor. Work it to a break-even trade, and then if the market turns around and takes you out, it takes you out. But this is not a time to be a hero. Try and take good trades. Use really good risk-reward parameters. Don't risk too much in any single trade. If you want to do options, that's not a bad idea. But just know that the target for me right now, I'm sort of assuming is going to be this 18-month line. I think that's where we're headed right now. So that's the update for the week. Go ahead and post any questions or comments. We'll see you next time.